Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. These are the top headlines that we're tracking at this hour. Markets reversed the opening lows of the day to trade with gains. This is the fourth straight day of gains coming in. The Nifty has reclaimed the 11,000 mark for the first time this month. Equitas Holdings recovers from the day's low after falling the most in a month. This after the RBI denied giving it an extension for listing the small finance bank. Futures too are seeing fresh short positions. RBL Bank has recovered almost 25% from its 52-week low. Brokerages have cut price targets on the lender but have maintained their bullish stance based on long-term synergies. Automakers record their sharpest ever drop in monthly sales. Commercial vehicle sales fell more than 50% in August, while the passenger vehicle sales dropped nearly 25% according to the SAM data. Good afternoon, Neeraj. It's a good start to the week. We've reclaimed the 11,000 mark, at least in the intraday session.
Yeah, and whatever little gains were left out on Friday, we've had that gains right now as well. The banks, again, participating and doing rather well for themselves. It's essentially banks which are either taking the index down or taking it higher. So the Nifty Bank, about 0.8%, doing rather well for itself in the session today. Bring up the heat map because that virtually will show what's moving in the Nifty Bank. A lot of broader market stocks, which we'll talk about a bit later on. But look at this turnaround in the Nifty breadth today. When we started off, there are about 10 stocks in the green. Now, about 15 stocks in the red, 35 odd stocks in the green. So good turnaround there. IT has taken a bit of a backseat, but autos, which was cracking thick and fast at the start of the trading day, has recovered some of the losses. You still have likes of Eicher Motors and Bajaj Auto in the red, but the likes of Maruti, etc., are not doing all that badly, which is a good sign. They are not as bad as they were. In fact, most of them in the green, which is not a bad sign. What is doing well? UPL, Larsen & Toubro, Yes Bank, a bit of a diverse set. The Bajaj twins, Finance and Finserv, doing very well for themselves. Remember, Bajaj Finserv was a Bloomberg Edge idea in the morning at about 850. Kotak Bank is up about 1.5%. That explains why the Bank Nifty is doing well with Yes, Kotak, as well as State Bank of India in the green, and ICICI Bank to about 1% higher. And the HDFC twins have not disappointed us. At least HDFC, which is up about 1%, is also doing rather well for themselves. So good market breadth. Autos recovering. Rate sensitive is doing okay. You only have IT, which is a bit of a sore spot. But, well, that's little cause for complaint.
That's the nature of the market, right? The day the high beta stocks do well, the defensives take a little bit of a backseat. So probably nothing much to worry on that front either. But the mid caps and the small caps, and there too, in line with what the index has been doing, there is some amount of movement, but it is more stock specific driven. So to start off first with a few stocks in focus, Dilip Buildcon for one, and we will be talking to the management later on in the show. They're looking to sell 5 HAM projects, and the stock's up about 9.5%. Shankar Building Products is the other one that's moved up about 17%. Equitas are not at the lowest point of the day, but the extension being rejected by the RBI. That stock's taken a knock of about 7.5%. But the key takeaway from the management conversation was that despite whether or not the SEBI clarification comes back on the reverse merger, within 6 months they will look to list. Other stocks in focus, Canara Bank, Canton Homes. Canara Bank is looking to sell its entire 30% stake in Canton Homes. Both these stocks are up and about. And AB Capital on the back of some money that it's received from the SL Group. Other stocks on the move, you've got Rain Industries, Jindal Stainless, Sarda Cropchem. These are the names that are active in today's session. 11% for Rain Industries on good volumes as well. Other stocks that are losing out, Sramani Ceramics for one is a stock which is down 20%. A check bounce, receivable didn't come in, 26 odd crores. And earlier on, they were already bad debt at about 15 odd crores. So this is in addition to that. So that stock's not really doing a whole lot much. Hathway and Den have seen a downward glide in today's session. Some profit taking. These stocks have been very active in the last 1 month or so. And volume buzzers, Nosil is doing well on the back of good volume, so that's up about 8.5%. Century Plyboards, 4.5% higher. 1.7 lakh shares have been traded on that one. And MCX, that's up about 6%. That trades about 24 lakh shares in today's session. But quickly on to the futures and options space and what is catching eyeballs out there. Navneet is joining us to highlight that for us. Navneet.
Thanks for that, Davina. I think the highlight today was that at least we crossed the 11,000 mark. And not only that, I think for an hour or so, index traded above that mark. though in the last 15 to 20 minutes of trade, we have seen some bit of cool off, about 40 to 45 points at least from the top. So 40 points higher as we speak. Nifty futures open interest up about 4%. Premium definitely has been coming off in the last two trading sessions. Pull up Bank Nifty, where more action has been seen, 12% higher when it comes to the open interest build up. Premium just about the same, around the 45, 46 points. But when we opened today, it was a gap down opening for Bank Nifty. From those levels to now, it's gyrated about nearly 350 points in trade. So indicating maybe at lower levels, some long positions definitely were taken in the morning session. India Volatility Index, that's also cooled off for the second straight day, at least a positive sign for the bulls, but it still remains at elevated levels of about 16. On the options front, the distribution has changed now as compared to the closing on Friday. The maximum open interest on the call side now, it is still at the 11,000 strike, but on the put side, I think it's moved from 10,800 to about 10,900, considering index has been trading above that mark now. But the day belongs to the put writers, I believe. There's been a lot of put writing which has come in at 10,900, 950, as well as the 11,000 strike. So even the 11,000 call is active. Remains to be seen whether we can close above the mark of 11,000. If yes, that the next big resistance that the market will be facing will be 11,150. Remember, multiple times in the month of August, we've tried breaching that mark, but we were defeated there. Stock futures, CESE, a lot of open interest build-up has been seen, and that's the reason I've picked up the stocks. However, up for the third straight day, long position seen, and the stocks also trading above its 50-day moving average. The other one is RBL Bank. A lot of brokerage notes have come about. The stocks also gained for the second day. And the volumes on the cash side, if you can just pull up the AV80 function, it's higher compared to the average volumes that we've seen for the last 20 sessions, which is a positive sign when the stock goes up on high volumes. So September futures of this one are also seeing some fresh long build-up. And Equitas, the stock in focus, trades below 50-day moving average right now. And the stock, this one's also fallen in very high volumes today, shorting clearly visible on the future side as the open interest has surged. And volumes higher on the higher side for Equitas is not an encouraging sign, as the stock's down about 7 to 8%, 7.5% lower, 14.5% higher when it comes to the higher open interest on futures side, indicating shorting here as well.
213 for the Nifty Bank, about a third of a percent for the Nifty 50. We're doing okay for ourselves. The important thing is the kind of trends that we see in select stocks which are doing well, and we'll get to that as well, select stocks too. But the other question is what can happen to the markets in the near term, and what kind of impact would the global markets have on the Indian markets? To remember, the globe is dealing with two specific points. One, the apparent near-term resolution of, if not the whole resolution, then at least conversations around that on the trade war based on what's happened on Friday. But as we discussed in the morning as well, you take it by as it comes, live by the day, because this has the potency to turn around very quickly. So that is part one. Part two, I think Jerome Powell in his conversation over the weekend did suggest that they are studying the impact that the Fed policy is having, and they're ready with the arsenal as and when the equity markets or when the world markets need them. So that's the other bit. This is what he had said, that there are these risks and we are monitoring them very, very carefully, and we are conducting policy in a way that will address these risks. So there are a few things that the policymakers the world over are trying to do. We'll try and talk about that with a global voice, Richard Segal of Manulife Asset Management. Well, I'm told he joins us on the show now. Richard, good having you. Thanks so much for speaking to us at Bloomberg Quint. Good morning to you. And good afternoon to you. Thank you. London and Britain have specific issues of their own, but the world markets at large, the commentary around the weekend, the last 3 or 4 sessions has been net positive, with apparently some positive talks on the trade war front, and policymakers too sounding sanguine about giving the markets what they need when they need them.
Yes, that's correct. The Fed and the ECB have become quite adept over the past several years of reading market intentions and reading economic signals, and not necessarily being ahead of the curve and providing them too much ammunition, but nonetheless letting the markets know that they are there in the background when necessary, that they won't let the world economy falter through inaction.
Richard, just trying to get a sense from you. 12 months ago, while the trade concerns were still there, it was more sentiment driven. Structurally, and the underlying growth was predominant. You didn't see the numbers crumble a whole lot much. This time around, both sentiment and the on-ground reality, both of them are lockstep, and it's having a very negative impact on the overall sentiment. Do you think that confidence is likely to remain low for a considerable amount of time in the future as well?
It is, because for better or worse, the trade frictions between the U.S. and China will persist for at least another year until at least the next round of U.S. elections. A lot of studies have demonstrated that the protectionist wave has been ongoing and becoming more worrying for a number of years, but the markets haven't paid too much attention to that as long as global growth has been at respectable levels. It is ironic, though, that what is causing this market upset and the discouragement of investment intentions is rather the headlines between the U.S. and China and the U.S. and many other trade partners. Also, when I speak with many manufacturers in sectors such as pulp and paper or metals and mining, it's not just from a macro level where producers and investors are nervous. It's at the bottom-up level also, and they don't see any light at the end of the tunnel for their orders either.
What did you make out of the PBOC's move on Friday evening to cut CRR by 50 basis points? And do you see lending activity picking up on the back of this in a meaningful way?
It was a necessary move, but I would characterize it as a fine-tuning. Of course, there's not too much that monetary policy can do when sentiment has declined for technical reasons, as most would characterize this, but it does, after all, have to interpret all of the economic trends that it sees, and if it sees the likelihood of demand weakening and output gaps rising, then it has to respond with this fine-tuning. Not that much, but nonetheless, another move by one of the major central banks to support the domestic and global economic growth outlook.
All right. So while we're taking a look at China at this current point in time and the numbers that have been coming out from the rest of Asia as well, we've seen India's GDP numbers, which have come in at about 5% for the last quarter, which has been the lowest since a number of quarters. What do you make out of global interest into equity markets then for the likes of India and the rest? And do you still feel within the Asian market pack, within the emerging market pack, it'll still be countries like Japan, which will augur slightly higher than countries like India in terms of an investment stack up?
There's always this tug of war in the minds of investors. Of course, the perfect Goldilocks environment is to have moderate growth with no inflation, no trade imbalances, no trade frictions. But if there's going to be a conflict, most likely it is between growth and interest rates. If growth is weak, then of course that's negative. But if central banks will respond by cutting interest rates, that's positive. What tends to happen over time is that markets will react first to lower growth, then more positively to the lower interest rate environment, and now we're expecting much lower interest rates for longer. This is the typical pattern. It shouldn't be surprising, but nonetheless, we've seen this so many times, we should come to depend on it. But because we are likely to be in this lower interest rate environment, I think that means that the outlook for global equities is going to remain relatively bright. Not so much because of the earnings outlook, but because of the interest rate multiplier effect.
Hi, Richard. Good afternoon to you from India. Looking at China's move of injecting about $126 billion into the economy via this cut, just wanted to know what sort of a reaction that it would have on the emerging market currencies. Do you think this would once again lead to weakening of yuan to the dollar?
I think to some extent, but to the extent that it's already had a big move and it was probably already discounted, probably not that much for the other Asian currencies. But I think also lurking in the back of many investors' minds is that the People's Bank of China will allow the currency to weaken more to encourage more export potential as opposed to supporting the economy. And from that angle, therefore, I think the impact will exist, but should be relatively small.
Okay, Richard, one final question. I don't know how closely you look at EMs in general and India in particular, but while we have had some individual issues of our own, by and large, towing the line of what the other EMs are, which is risk off right now, do you reckon this would continue, or will growth countries like India, even if growth is tapering off slightly hard than the others, so growth economies like India will eventually find favor with FIs? Because thus far, in the last 1.5 odd months, India has seen some tremendous quantum of outflows from the FI community.
When I look at India, I still see an economy performing relatively well. In talking to some of the issuers from that country, they do notice some softness, but nothing too alarming. I think what I do sense when I talk to the experts there, though, is that the weakness where it's to some extent a ripple effect from the global economy. Because India is less integrated, the impact isn't as large, but there are some sectoral impacts. And there we can look at the non-bank financial sector, where that area is a bit worsening, I'm afraid.
Okay, Richard, we'll leave it at that. Thanks much for taking the time out and speaking to us at Bloomberg Quint.
Anytime, thank you.
Well, that's a view from Manulife on the world economy and markets at large, and how supportive the central bankers have become too, and a quick view on India too. By the way, as we speak, we're now trading, I reckon, at the highest point of the day, 262 odd points for the Nifty Bank. The Nifty 50 about 0.5% no, but the Nifty Bank, I think, is trading in or around the highest point of the day. So it's a good surge. Let's wait and watch if this indeed lasts. Well, what is not doing all that well is Equitas Holdings. It fell the most in a month after the RBI refused to grant it an extension to list its small finance bank. The regulator has now put in some restrictions on the bank, which will stay in place till the small finance arm is listed. Shefali Malik joins us now with the details. Shefali, 7% lower, a sharp gash despite brokerages saying that all is not that bad.
Well, yes, first to take you through the news, basically. So RBI in a letter on Friday denied extension of the deadline for listing of the bank, which was on September 4. As a penalty, so the RBI has said that the bank cannot expand its number of branches till the further notice, and also cannot increase the salary or change the salary of MD and CEO till further notice, and further restrictions may be imposed if the bank fails to make satisfactory progress towards listing of the small finance bank. So what Equitas had to say about the same was that they had already proposed a scheme of arrangement, and it got delayed because it's still awaiting approval from SEBI, post which it will go to NCLT, and in case a scheme of arrangement does not get approval, then in that case they are planning to list the bank via IPO route, something which Ujjivan is also doing. So what is the market opinion on this? Investec is saying that approval to the scheme of arrangement would be the best possible option for all the stakeholders, and in case the company has to go through the IPO route, the target price would fall to 140-150 rupees per share, which is 20-30% above Friday's closing price. So still above, still within their target price range. Nirmal Bang said that no major impact, as the bank had already converted most of their branches, the NBFC branches, into bank branches, and had minimal plans from here on, and any knee-jerk reaction would actually be a buying opportunity. Nomura actually spoke about the reverse merger, whether if any clarity comes on that front, then that will be a big positive. However, management told us in the morning that they will list the bank, irrespective of the reverse merger clarity, that they can only do after completion of 5 years. So let's hear out to the management what they had to say on the same.
Our objective was to try and see how do we have only one listed entity for basically only one essential business, which is a bank business. So we came with a scheme of arrangement between the holding company and the bank, whereby the bank would capitalize around 890 crores of its free reserves and issue shares without cash consideration to the shareholders of the holdco, and then seek to get those shares listed in the exchanges. So this scheme was approved by the board sometime in the end of January of this year. And subsequent to that, we applied to SEBI for approval. This requires prior approval from SEBI before we move the NCLT for the other approvals. And there is again a small deviation in that because the SEBI guidelines does not exactly cover the scheme of arrangement that we have set out. That feedback from SEBI is still awaited as on date. And if they approve it, then we will go through the NCLT and get the scheme approved. In case SEBI turns down our request for the scheme of arrangement, then we will just do an IPO and get the shares listed of the bank. In our estimation, it's a 6 months process. We hope to get the shares of the bank listed at least by March 2020.
Okay, that's about Equitas, but the other stock which is in focus is RBL Bank, which has taken a beating post its first quarter earnings, where it guided for some pain in its asset quality going forward. Post the correction, brokerages have trimmed their price target on the stock, but have also maintained their bullish stance based on its long-term potential. Shefali is with us to tell us more about what the brokerages have stated in their reports. Shefali, over to you.
Well, first starting with what Kotak has put out in its note, they've upgraded it from a reduced rating to an AT rating, and the target price, however, has been cut down to 350 versus 500 rupees a piece earlier. And they're saying that the revised fair value captures risks from higher provisioning, and that is likely to happen mainly because of the asset quality concerns. Lower target, again, due to lower ROEs, lower growth, and potentially lower capital infusion. So that is one concern which has been playing. But the upgrade from reduced to AD has come in mainly because the stock price corrected quite a bit in last couple of months, and they expect the ROE to contract to about 8% and have cut the EPS by about 40% for FY20. ICICI Securities also put out a note, and they're maintaining their buy rating on the counter, and the target price has been cut to 536 versus 725. And again, they're saying that stock price has fallen because of the asset quality concerns and the growth outlook, and they've cut the target for the credit growth of the bank for FY20 and 21 given the systemic slowdown. But they think that the long-term story for the bank remains intact given the top quality management team and no significant legacy issues. So that's what brokerages are talking about RBL Bank.
All right, Shefali, thanks very much for that. Those are some stocks to watch out for, particularly RBL Bank and Equitas. Moving on, volatility now has a new aspect, and it is not the trade war, not the global economic slowdown, but US President Donald Trump himself. JPMorgan has come up with its own volatility gauge known as Wolfefe Index. Neeraj is here to take us through some very interesting features of that index.
Imagine if it's not the US President, it will be the top of the resume that, hey, JPMorgan made an index on my tweets, but that's the power of Donald Trump.
It's really interesting how this has come. It's become the epicenter of all the moves across the globe.
Yeah, and more so in the rate markets. Actually, this index quite frankly talks about those rate and the mortgage market volatility being caused, not necessarily just the equity markets viewers, so keep that in mind. But this was the famous tweet that Donald Trump had put, and based on that, JPMorgan has made this index. So it quantifies the impact of Trump tweets on rates volatility. It's the Wolfefe Index. That is the thing that it does. And of course, what the index also eventually, and some graphs will come up to show the impact that it has had. Now, the reason why this has happened, and some analysis that JPMorgan did. Now, let's get that. Yes. What Donald Trump has done. Over 10,000 tweets from his personal handle since he took over as the US President, and the focus on over since in the last few months, that is in the last few weeks or months, what has happened is that the daily average has actually gone to a dozen non-retweets from his personal account. So one thing is for somebody to retweet, and a lot of people might be doing that, but Donald Trump almost does an average of dozen fresh tweets from his personal Twitter account. So that's the level of activity that has happened, and the subject shifts from market moving topics to a lot of other topics as well. But what is getting a lot of likes from his community are not necessarily market moving tweets, but tweets which have this very different language which people tend to associate with. So it need not necessarily be market moving. So therefore his tweets have a very varied nature, but the impact is certainly there. And I think when they did the analysis that JPMorgan, and these are a couple of charts. I mean, look at this. This is tweets that have caused a substantial move in treasury yields, and the white line, the white bar, are the tweets followed by at least 0.5 basis moves, which is as per the left-hand side index, and how that has actually inched up in the last few days, at least in the month gone by, as also the 3-month to 10-year swaption implied volatility, which is the right-hand side index, and even that has inched up. What has, however, happened is that of late, his market-moving tweets don't get the same kind of likes and retweets as it used to. Look at this. So this is the ratio of the average likes and retweets for Donald Trump tweets, and that has consistently come down, especially for the market-moving tweets. Now, how JPMorgan has done this index, it's a complex subject. I'll try and simplify. It's difficult to understand. But the 2 or 3 things that they've done is they've made a gauge, which is what they do is they leverage the tweet results along with supervised learning techniques to produce a classifier trained. So this is the classifier that they produce. That classifier is then able to, let's go to the next slide. That classifier is that they folded into the Wolfefe index, leads to the Wolfefe index, which is folded into the volatility fair value model to figure out how effective his tweets are. But effectively, the tweets are very, very effective for the markets, for the rates markets. However, the market moving tweets at least are not the ones which are getting the maximum likes and retweets. So on a personal account front, based on the likes and retweets, maybe that's not having as much of an impact, but hey, he has an index to his name.
Well, that's the power of the Twitter account of US President, that brokerage houses are now coming up with an index over that. Thanks a lot, Neeraj. That was pretty interesting details regarding a new volatility index, which has come just based on what the US President tweets past. Shifting focus back to markets, we're around the 11,000 mark. One stock which has been in focus, and that's Dilip Buildcon, that's decided to sell 5 HAM projects to Cube Highways. The total valuation of the project stands at 7 billion rupees. To help us understand how the deal could strengthen the balance sheet of the company and also unlock capital for future projects, joining us now on the phone line is Head of Strategy, and Planning, and that's Rohan Suryavanshi. Hi, Rohan. Good afternoon to you. Good to chat with you again, Rohan. You're divesting 5 HAM projects to Cube Highways, and the valuation is around 700 crore. To begin with, if you could tell us what's the timeline of the payment that you'll be getting from Cube Highways?
Hi, Navneet. A pleasure to be on your show as always, and hello to Neeraj as well and Devana as well. So, like you rightly pointed out, this is a transaction to sell 100% stake in 5 of our HAM projects to Cube Highways. Now, just to answer the question that you said, the deal basically is we were supposed to invest 568 crores in these as equity in these projects, against which Cube Highways is giving us consideration about 702 odd crores. Now, the timeline and the way that this deal is structured is that out of this 568 crores, we were supposed to invest the first 51%, which is about 290 crores or so. The second 49% during construction would be invested by Cube, which is about 278 crores, based on us meeting certain conditions. As the project gets completed, they will pay us another 180 odd crores or so. This will bring the total consideration paid by Cube to about 450, 460 odd crores, and which equals to 80% of the investment that we would have put in, which is 568 crores. Now, the remaining 230 to 40 odd crores, Cube will pay to us when we are able to get them the final equity, when we're able to finally transfer the equity to them after getting all the approvals from the NHAI and the lenders, which usually will take about COD plus 2 years, because that is what is currently mandated by law in the NHAI contracts. We are hoping there will be a relaxation in that. But as of now, that is how the deal will sort of flow.
Rohan, if I got that correct, 290 crore is the equity that is invested by your company. So tell us, going ahead, will there be more equity investment required from Dilip Buildcon into these 5 HAM projects, or 290 is the limit?
So originally we were supposed to invest all of it. So now, given the fact that we have a buyer and who's investing with us during construction, the equity consideration for DBL anyways comes down. And we had anyways planned these projects in such a way that we could, we could take care of all these equity commitments through our internal accruals. Now, to answer your question, I don't foresee that DBL will have to invest more equity above the 290 crores. Even if it has to, it will be immediately refunded by Cube as and when we meet those conditions, and those are pretty simple and straightforward. So I don't foresee that we will need to do that. But even if that is, we already have had built all of those models in our current cash flows.
And the proceeds that you get from Cube Highways, will that be used to retire your debt? If yes, what's the quantum that you're aiming at?
Of course, whatever comes in will help us to reduce our debt furthermore. But in this financial year, there is nothing that will come from the Cube Highways because we will be hitting the 50% project progress at the end of this financial year, about March or so. So whatever money will flow in the next financial year only. But even without that, our current debt is about 3,300 crores. Now, we are already foreseeing, a reduction that will happen in this on the total basis as well. And even as a debt equity ratio, we have said that, after our current debt equity ratio is about 1.01. It will come down to 0.8% or 0.8 at the end of this financial year or so. It has already come down by 5% from last quarter to this quarter. So we're expecting a total reduction of 25 basis points in this financial year, and we are very confident that it will happen. Given the fact that we are not investing any more in new equipment, we are also not seeking any additional working capital lines. So we're very confident that we should be able to do that. Let me also point out that in the last 5 years, DBL has been on an expansion mode. So our revenue almost quadrupled in that time frame, but debt only increased by about 60-70%. Which is, it went up from 2,000 crores to 3,300 crores, when the revenue went from 2,600 crores to 9,200 crores. So we've been very, very mindful of how we've, used our debt, and our growth has mostly been fueled by internal.
You've stated that in the past, Rohan, you've been comfortable with the debt equity, and the guidance you're giving is you'll reduce it to 0.8 by year end. But one more question from my end. I think the company was also in talks with a couple of other investors for your other 7 HAM projects. What's the status there? What's the timeline that you're looking at? Around what time will you be able to sell those projects?
You're absolutely right. We are in talks with other investors to hive off the 7 remaining HAM projects that we have. We are very confident that it will happen in the next 3-4 months. But and the structure of the deal should be on the similar lines as the Cube Highway transaction. But let's wait and watch once it finally happens. Given that there is a lot of due diligence and everything that goes on into completing any deal of such magnitude, and these are all individual projects where the due diligence has to happen at the individual level. But I hope to give you good news whenever in the coming few months.
Just to go back to your, the question on debt, you said it'll come down to 0.8, but the number that we're hearing at the absolute number terms is that through these projects you'll bring down debt by about 1,800 crores. Is that realistic? Is that something that is a ballpark number which is correct?
So, thank you for your question. It's basically the debt for all those projects that you had to take to build these projects. These don't come on the standalone level. These come on the consolidated basis. But you're absolutely right. As we will harvest and divert these projects, it will reduce the debt by that much amount. But as of now, since these projects are still under construction, that much debt has not even been taken. The debt gets keeps keeping up, going up proportionally as the project progress keeps on increasing. So when it finally finishes, there will be that much debt, but eventually it will all be transferred to Cube, given that they will be buying the assets.
Okay. And one last question, since you're looking at divesting your HAM projects, 5 now, 7 in the pipeline, you will not be looking at bidding afresh for any new HAM projects, right? Aside from the fact that they feed into the EPC projects.
Sorry, I couldn't get that. You said, are we not going to invest in any more HAM projects?
Yes.
No, that is not the thought process that the company has. See, the fact is the government of India will always give out half of its projects under EPC and half of its projects under PPP. Just because they will never have enough
my question came more in line with the fact that you said your focus is going to be more towards EPC projects. That's why I asked you the question.
Absolutely, and I appreciate that. However, the point I was trying to make is, let's say the government of India wants to, the total order flow that comes out in a year is about, let's say, 1 lakh crore. And half of them are EPC and half of them are HAM. If I choose to only do EPC projects, I will have to be extra competitive to win the amount of orders that I need to win under just the EPC route, and it will, reduce my overall margins. So which is why the company always undertakes projects in both the formats, under EPC and under PPP. But the idea for doing any PPP project is always that we want to just do the EPC part, and then we want to hive off these projects to an investor, which is what the company has demonstrated twice. So first, we sold off a complete portfolio to the Shrem Group. We had 24 assets. Again, there also we had assets under construction, which we were able to successfully divest. And that deal is about to come to a conclusion in this quarter and the next. And second, now with the Cube transaction, again, we've showcased our EPC capabilities and, the trust and the faith that an investor has, that they are willing to put and invest along with us during construction and take these projects off us when they finish. So this will be the model that DBL will continue to do even in future.
Got that. Rohan, we'll leave it at that. Thank you so very much, and all the best for finding suitors for the next 7 HAM projects as well.
Thank you very much, guys.
All right, that was the management at Dilip Buildcon. The stocks have not been doing a whole lot badly. In fact, the last few days has really picked up momentum. 420 on the stock price today on volumes which are higher than average, about 1 million shares that have been traded. Back to the markets, back to the index. Steady ground on the Nifty, not managed to rescale that 11,000 mark that it hit in the intraday session, but still hovering close enough. Bringing in our experts on the show then, Brijesh Singh of StockAxis is joining us along the show. Along with him, Hemen Kapadia of KRChoksey is there, and on the fundamental side, Dharmesh, Kant of IndiaNivesh Securities is also joining us. But we'll go to technicals first. Levels are important, trades are important, so let's start off first with you, Hemen. What is it that you're going to do on the Nifty, Bank Nifty, if you have a trade there?
I'll stick to the same line. Good afternoon, Devina. Thank you for hanging. I'll stick to the same line that I've been taking for the last 3 weeks. Oversold bounce back, and Friday in the FNO show, I gave a buy call on the 11.1 call option. Target's been hit. Now I have a buy call on the 11,200 call option, but not the weekly. The monthly series, Devina. The 26th September ending. So buy the Nifty 11,200, 26th September call option at 60, stop loss 40, target 100.
Okay, that's on the Nifty. Nothing on the Bank Nifty?
Bank Nifty, I think I have a similar view. We are at 27,453, Devina. We are heading towards 28,800. Sorry, 28,300 and then 28,800. So I think one would want to buy the 27.8 or the 28,000 call option. Once again, not the weekly, the monthly series, Devina. I think we are all set for a bounce. The bounce has begun, with a few hiccups here and there. We have a holiday tomorrow, so maybe not too much of activity today, but yeah, a minimum 800 point, if not a 1,000-1,200 point bounce in the Bank Nifty is what I think is going to happen.
Okay, that's the technical view coming in from Hemen Kapadia on Nifty as well as Bank Nifty. He's advising to buy the monthly 11,200 call of Nifty. Hi Brijesh, good afternoon. What's the trade that you're recommending on Nifty or in Bank Nifty after we have breached the mark of 11,000 and also managed to trade above that for a while?
Good afternoon, Navneet. See, if I talk about Nifty still is been consolidation range. The range which I have been looking is on a downside 10,750 or say 10,720, followed by 11,200 on the higher side. Still that 200 day simple moving average is being acting as a resistance, and it has to be surpassed. And then if it has been surpassed, then only we can say, okay, we have come out from this consolidation range or the bear, or a short-term bear phase, and everything would be coming up, and on a buy side. Right now, for a very short-term trading basis being concerned, Nifty, I'm looking a little bit bearish from an oscillator point of view, so I'm going for a sell side. So 10,990 and above, one can go for a sell side with the strict stop loss of 11,050 and play for the target of 10,890. Time frame to hold the counter would be a couple of sessions.
Okay, so Brijesh is advising to sell Nifty above the mark of 10,990 and the stop loss he's placing is 11,050. All right, let's bring in some stock-specific ideas for this afternoon. Hemen, coming back to you, which are the stocks that you're recommending in trade today?
Well, suddenly, Navneet, there seems to be everything that is looking positive. But yeah, I have a buy call on SBI at entry at 276, stop loss 271, target at 286. I have a buy call on Cummins. I I had given it on Friday in the FNO show, but I'm repeating it with a different price level. It's gone up a bit, but yeah, it's at 581 right now. I'd say buy at 578, stop loss 570, target 596 Navneet. So both buy calls, SBI and Cummins.
Okay, Brijesh, what about you? Your individual stock bets for this afternoon?
See, Navneet, I have a 2 buy call, and my first buy call is UPL. Now, the UPL, after making a high of 706, got corrected and making a low of 496. It has given a bounce back. It's been trading about 200 simple moving average, followed by, if we take a 2.706 and 496, and if we draw a Fibonacci retracement, 38.2% retracement, well, it's been trading above that. So somewhere around 575 to 578, one can look out to buy UPL with the strict stop loss of 550 and play for the target of 620, 625. Time frame to hold the counter would be a week time frame. Second buy call which I've been looking is Star or Stride Pharma. The stock on the daily chart had made the higher lows formation with oscillator coming from the oversold zone, which is giving a buy signal. So present rate or somewhere around 395, if it trades, one can look out to buy with a strict stop loss of 375. Play for the target of 435. Even the target can be extended to the level of 450. Time frame to hold the counter would be again a week time frame.
Okay, so those are some individual stock ideas coming from our technical experts. I just want to pull up a few stocks. MCX is at day's high. That's sitting with gains of 10%. Remember, the stock had touched its 52-week high in the recent past, I believe, on the 6th of recently, I think last week or so. It's going back towards its 52-week high levels. It was down last week because of the whistleblower report, which was sent to SEBI. We also spoke to the management, and they clearly denied all the allegations that were mentioned in that report. So some bounce back at least from the lower levels. That's for MCX India. All right, let's get chatting and chat with our fundamental guest now. Dharmesh Kant of IndiaNivesh is here with us. Hi Dharmesh, good afternoon. Do you track MCX? If yes, what did you make of the developments and the buying interest that was seen before the whistleblower report which came into limelight? What's the view there? Would you advise someone to take a position here, or what are the prospects looking like for MCX India?
Yeah, good afternoon. I have my sincere apologies. We do not track MCX, so I won't be able to comment on any of the developments out there.
No problem, Dharmesh. Let's get chatting and talk about the auto space then, which has been in focus for a while. And of course, the SAM numbers which have come in were pretty much anticipated, considering we have seen, I think, the 11th or the 12th month of slowdown when it comes to the monthly sales numbers. But the stocks have bounced back from the lower levels. In fact, we did see some bit of returns coming in August. Even in the month of September, a couple of stocks have been moving higher. Are you finding any sort of valuation comfort? Would you look at bottom fishing for any of these stocks, or would you wait for the cycle to turn?
See, I don't see, the cycle has turned for automobiles, be it two-wheeler, four-wheeler, or, commercial vehicle segment. So cycle is clearly in the downtrend. The question here to answer is how much more kind of, hit the automakers are going to take. The deceleration in the growth, how much more aggressive this can get. So that is pretty open. Will it be 20% kind of a degrowth, or 15%, 10%? So these are the questions which are still not answered as of now. The headwinds which was clouding the auto space, be it electric vehicles, are out of the way. Now it's a level playing field for IC manufacturers, and in future the EVs which are going to come down. The GST thing, rate cut of 10%, I think it was too much of hype was being created around that. That is not going to meaningfully change the sales trajectory of automobiles. So it's a cyclical downturn which the industry is going into, and we are hoping and praying that this do not turn into a recessionary trend. So that is a big question mark. Going by how the monsoons have panned out, is highly likely that there can be a recession going forward. So what I see as of now is you may have a trading bounce back in automobiles, and this will not last long. So for a trading play, Hero MotoCorp looks pretty attractive to us. Apart from that, none looks very attractive. So to my mind, post Q2 season is over and the festive season is over, you will see more downside in automobiles in the entire space. Two-wheeler, four-wheeler, passengers, commercial vehicle, everything has more pain to undergo now.
Yes, Bank is up about 4.5% today, so not bad going for that counter. Just the fact that it has been so heavily beaten down. Now, probably news flow around Yes Bank has petered off, but the stock in tandem with the rest of the market sentiment seems to be, charting its way forward. About 63 on the stock, about 4.5% higher. What's not doing well? Hathway Cable, that one's down about 7% You've seen last month itself, the stock was up about 34%. So some bit of profit taking on that counter. Equitas, we've spoken about this one, 7.5% now lower on this counter. Hemen, do you track any of these? Hathway or an Equitas, or for that matter, Somani Ceramics, because that one is down about 20% for fundamental reasons. But still, if you do track the stock.
Don't track Hathway very closely, but we've been range bound, Devina, for what? Almost 12 to 15 months. Large range, 15 on the downside, 38 on the upside, and we were threatening to give an upward breakout, and obviously that's fizzled out now. So not much to look at. I think most of the mid caps don't look very pretty, and if I look at the slightly longer term charts, Devina, it's oversold, but no clear decisive directional bias as yet, so wouldn't touch much. Somani Ceramics remains in a lower top, lower bottom scenario, and yeah, further pain on the cards.
All right. Dharmesh, just to get in your opinion as well on Equitas. I mean, the extension not been granted by the RBI. They've given it the upper limit of about 6 odd months. Even if the SEBI approval doesn't come in, they will go in for a listing. And then what happens to shareholders in the holding company discount? Do you see that widening?
Yeah, see, again, the problem is same. We don't cover Equitas, so again, as specific guidelines, won't be able to comment on that.
Okay. A quick take from you, Brijesh, Ujjivan, Equitas, do you track any on the charts?
See, Equitas on a weekly chart has been trading with lower top to lower bottom formation. So till the stock doesn't give closing above 120 or 125, there would be a selling pressure. Now, on a downside, it has a support at 90. It should hold on for a temporary basis. If it doesn't hold and if it breaks, then the next level on a downside would be again, the stock would be retesting its low of 80 or 78. So right now it's in a downtrend. So if someone wants to go for a sell side, then I would be suggesting keep a strict stop loss of 112 and look for the target of 100, or below that also would be 95.
By the way, 2 or 3 things that you need to monitor. One, Dilip Buildcon, of course, is trading at the day's highs, up about 10.5%. But I'm looking at stocks which are trading at 52-week highs. Metropolis is up 7.5%, and is this very nice interaction on our website bloombergquint.com. If you log on, you will get a sense of what the management is trying to do with the business over the near term. That stock is up 7.5% in the session today, so watch out for that one. Vinati Organics, with this 2.5% up move, is now trading at fresh life highs for itself. So is Credit Access Grameen and Relaxo Footwear, something that I think Marcellus investment managers have spoken about extensively on our platform. That stock is up about 2.5%, trading at 494. It's off the highs of the day, but still on a closing basis, this would be fresh 52-week highs. Now, Dharmesh, any of these companies which fall within your coverage universe and you would have thoughts on?
I think Relaxo is a good bet, but again, I would prefer Bata over Relaxo. If I have to play the space, because this space is looking pretty attractive, and in the consumption space with the kind of property Bata is sitting on, it merits a much better buy than Relaxo. Relaxo again is a area specific company. It's not a entire pan India kind of a presence, and there has been a good sales traction in Bata as well. So lack of choices out there, both are looking good, but to my mind, I think Bata is a better bet.
But the valuation differential doesn't worry you at all, Bata compared to Relaxo? Significant difference in the kind of valuations that they're trading at.
See, the valuation, yeah, this valuation differential is just because of the balance sheet point of view. If you look at the type of property they are sitting on Bata. So that valuation has been discounted in the price. It's not the earning valuation which Bata is getting presently. So that differential is primarily on account of SOTP based valuation for Bata rather than PE based or EV by EBITDA based valuation. So that differential will be there because the property valuation, back of the envelope calculation just suggests that around 4,000 to 4,500 crores out of property valuation Bata is sitting on if they are going to liquidate it.
Okay. That's Bata for you. We just want to highlight a few stocks which are moving higher. Manappuram Finance, I believe, is at the day's high. That's up about 4% in trade. And banking stocks which have rebounded today, we've already highlighted Yes Bank, RBL Bank. We spoke about it at the start of the show. That's up for the second straight day. A couple of brokerage reports also coming here. Besides that, let's just pull up Muthoot Finance as well. I think some clarification did come from the management. They did have an investor call related to the employee strike that is taking place in Kerala, and the CEO clearly stated that only 4% of the revenues come from there, and the branches so far which have been shut down have given loan of about 100 crore. That's the gold loan, but they will not get impacted much right now, and we are seeing some of the relief. At least the stock has been under pressure in the recent past. We were witnessing a lot of fresh shorting for this counter, 3.5% higher right now. Hemen, would you bet on any of these gold financing companies technically right now, Manappuram and Muthoot, which are up and about today?
I think both have OI build up, Navneet, Manappuram and Muthoot both. But like you said, if you were to give me a choice, I think Manappuram looks distinctly better. We have a 6.5% long build up coming in, Navneet. Stock has been range bound, but I believe there's a small positive bias which is creeping in. We've been range bound in the 6th week. Okay, we're starting the fresh week, so let's say, to be fair, 5 weeks. Range is between 114 and 125, and now today we're on the verge of overcoming the 55-day exponential moving average. The daily MACD is on the verge of giving a buy. Long build up, set for a breakout, but the breakout actually happens at 125 odd now need. So, but yeah, even that's not very far away. But so pick and choose. Clearly, Manappuram looks better. I'm not sure how much of a big upside there is, but a short spike seems to be around the corner.
In fact, we've been highlighting how both these gold financing companies, they've weathered the liquidity crisis so well, which was triggered by IndiaNivesh last year. If you look at year-to-date basis, Manappuram has given you very good returns of over 30%. Though Muthoot, last few days, it's given up most of the gains that we were seeing because of the strike in Kerala. Though management today in an investor call have highlighted this will not impact their bottom line so much, considering the branches which have been shut, because they get only 4% of their revenues from that state. Dharmesh, would you then use this as an opportunity because gold prices are high, which serves well for them, that increases the value of their collateral? And also what's worked for these gold financing companies vis-a-vis the other NBFCs is the shorter tenor loans that they give out. The sort of correction that now one has seen in Muthoot, would you advise it could be a good buying opportunity now?
Yeah, definitely. If you look at all the gold financing companies, the LTV has definitely gone up for them. And going forward, as you know, the entire economic scenario is panning out through the world, I do think they will stand out as an advantage when compared to regular NBFCs. So both Manappuram and Muthoot does look good, and as you have pointed out, Muthoot, I mean, they have come out with a clarification. But going forward, I do think in NBFC space, if something is a value buy, apart from Bajaj Finance, these are the companies which one should be looking into. And valuation will get justified as the growth come back, and it will come back better for them, considering the fact that some damage has been there on account of floods and all. So that will again push the business up for these companies as they have significant presence in South India.
Okay. Dharmesh, one question before we let you go. RBL Bank, while post quarter one results and the commentary that came about thereof, the stock was beaten down quite heavily with regards to some of its exposures to some slightly sketchy accounts. But now the stock has recovered. Over the recent past, you've seen the gains coming in. Brokerages are now talking about focusing on the long-term prospects of RBL Bank. What would you do here?
See, I would wait for Q2 earnings to come out and the management commentary post the Q2 earnings update. I mean, there has been slippages both in Yes Bank and RBL Bank, and updates have been there, but number specific updates is still not there. So what is the level of NPA is going to rise, and what are the credit costs? Primarily, I would be essentially looking into the credit cost guidance which they give after the Q2 numbers. So trading bounces can be there, but I do think there's a problem out there, and one should wait before taking an investment call on both RBL and Yes Bank. So I would like to look at the Q2 numbers first before cementing investment buy. We had a coverage on RBL Bank, and we have downgraded it to neutral as of now.
Okay. Dharmesh, we'll leave it at that. Thanks much for taking the time out and being with us today on the show.
Thank you.
The thing with RBL Bank is not just today's move. It moved up almost 4 or 5% in Friday's trade and has moved up another 6% or odd in today's session. So from, I think, 300, that's the 7-day move, but look at those last 2 days. So from a level of nearly 320, it's at 358. That's a sharp 10-11% up move that we've seen in RBL Bank in the last 2 days. And it's trading in and around the high point of the day with substantially high volumes. Exposure to McLeod Russell, sanctions to McNally Bharat, Coffee Day Enterprises, all of that. And I think exposure to Khaitan Group as well. Not Everready individually, but I think the BS Khaitan Group, they have some exposure. So that plus those stocks of some resolutions and some asset sales at Coffee Day would all mean that these would be upsides here. We were talking about this in the morning on the morning show as well, that RBL Bank could well turn out to be an interesting mover, and it certainly turned out to be that way. Good, strong gains. Let's wait and watch if they get extended. The one that is having some phenomenal gains is Metropolis, now up 9.5%. Just look at that stock go in today's session. It's trading at the highest point of the day. There must not be enough data to back it, but I would still urge you, Hemen, to look at the stock price of Metropolis Healthcare and tell us if you can give us some indication of what does this up move indicate. Can it do more than where it is right now?
Paucity of data, Neeraj, like you said. There was a 2 lakh volume spike on 26 August. Since then, there have been volume spikes coming in. I believe there has been some solid accumulation at lower levels, and now it's reached the takeoff stage. So we had a 4 trading session sideways move, 1170, 1240, and now we've sliced through that. No levels, but yeah, further upside seems possible. Fresh buy, I'm not sure.
Okay, certainly doing very well, 10.5% higher in trade. Well, stay on German. We'll hear out more from other experts as well. But one thing that's center of everybody's attention is crude oil. Now, the International Energy Agency has cut its estimates for oil production for the year over global trade worries. Fatih Birol, the executive director of IEA, expects that the oil production to be at 1 million barrels per day over this year as the oil demand is weak. Listen in.
There is a need for a big shift, but not in the oil markets, mainly in the economy. More than at any time in the history, these countries in this region or Russia, they have to diversify their economies for 2 reasons. First, as we all know, these countries' economies rely on oil prices. First of all, a lot of oil is coming from United States, shale oil. According to our numbers, last summer, United States gross exports became number 1, overtaking Saudi Arabia and Russia. Who could have thought US exports would be higher than that of Saudi Arabia? Second, on the consumption side, there are technological developments. Electric cars, efficient petrochemical industry, efficient planes. Therefore, demand is weakening, and for the production, new players are coming in the market. So we cannot rely only on the oil revenues in this region. High time for diversification.
Okay, so diversification, and I hear that from every CEO and every minister that I go to see in the region. You're actually saying 2019, let's just take that forward. You're saying in the IEA report, 2019 oil demand assumes 1.6 million barrels a day growth in the second half. That is 3 times the number that we saw in the first half. I know the issues you're talking about are long term, but does that demand number still stack up? Are you still sticking to that?
First of all, diversification. Yes, we have been hearing this since a long time, but this is perhaps the last warning, because US oil is coming very strongly, production, and the demand is getting weakened. Second point, our demand numbers. We expect this year, on average, about 1 million barrels per day of growth, a bit weaker than in the past. We thought the reason is mainly the economy. The trade tensions between the US and China, other various Brexit and others, may well mean that lower economic growth, therefore lower oil demand growth.
So just to be clear then, instead of 1.6 million barrels a day in the second half, you're coming down to 1 million?
So altogether, throughout the year, it is if taking into account the first half, it's about 1 million. But we need to think a bit medium and longer term. Oil demand will not be so strong in the future as we have experienced in the past because of the electric cars, because of the petrochemical industry becoming much more efficient. Even the planes are becoming more efficient. So therefore, the oil demand growth will be slower than in the past. We will still need oil, but the weaker oil demand growth, plus another major supplier, US, is in the market.
Well, oil will be interesting to monitor over the course of the next few days and weeks. By the way, some flashes on your screen for a small cap stock, Skipper. They are favorably placed in a 524 crore project from Power Grid Corporation that's led to the stock shooting up in trade 15% higher. Well, a bunch of things looking very, very sharp right now based on announcements that are coming out for them. Maybe it's made Sharad Dubey's job that much easier. He's Johnson with the list of the Fab 4 stocks of the day. Sharad, good afternoon. What's made it to your list?
Good afternoon, Neeraj. The first stock is L&T, which was up almost more than 2% after it has secured a major contract, which is worth rupees 5,000 crore to 7,000 odd crore rupees for constructing a residential project in Navi Mumbai. Now this project is for your Pradhan Mantri Awas Yojana. Up next we are having IndiaMart, which is up almost 12% after hitting its all-time high of 1,575 odd rupees. Up next we are having RBL Bank, which is, fresh longs have been seen, and with a high open interest of almost 21%, the stock has risen by almost 6.5%. And the last stock of the day we are having is Blue Dart Express, which is up almost 5.4% with volumes almost trading at 30 times its 20-day moving average. Back to you.
Okay, thanks a lot for that. The interesting one is IndiaMart, isn't it? We're talking about stocks which are trading at fresh life highs. Look at IndiaMart, some smart moves there. B2B businesses also driving valuations from the market. This one at 1623 is certainly creating wealth. Parthiv Shah of TRACOM Stock Brokers with us on the show. Parthiv, good afternoon. Any thoughts on some of these businesses? Good having you, of course. Any thoughts on some of these businesses? IndiaMart, for example, I'm looking at the stocks, newly listed businesses, Affle India trading at fresh life highs, Polycab almost there, IndiaMart 12.5%, 13% higher, trading at life highs for itself. Do you track any of these businesses, IndiaMart in particular?
Good afternoon, Neeraj. Definitely, Neeraj. I've gotten a chance to meet the management of IndiaMart when they were coming up with the IPO. I see the business model is extremely good. And the more important point is they have subscription-based income, where I think they are extremely well placed in terms of trying to garner that and I think making businesses more productive. And I think we were always worried about the fact that a lot of SMEs and MSME companies who are predominantly their subscribers, and especially subscribers who are like the high paying subscribers, because they have different tariffs, gold, platinum. So we were worried that will these companies will be able to renew their deals. And I think to our surprise, I think what they indicated in terms of their pipeline and in terms of what their survey showed, I think the sentiment was very good because it was certainly helping a lot of these businesses become more and more productive. And it's a free cash flow generating company where I think they have a lot of accrued income which will be shown over the period of years. So I think it's a fantastic business model, and now they will have a lot of operating leverage kick in with more and more subscribers starting to upgrade their plans, which is also their future targeted market area. So certainly I think it's a great business model. No doubt, I think it's very hard to call it as India's Alibaba, but certainly I think this is a company which can certainly scale from here.
Interestingly, the stock is almost approaching levels double to its issue price. It's just, I think, $400 away. The issue price band was somewhere in 970 or to 973, and the stock is at 1620 for the listing day. Got a 20% premium, and post that the stock has come up quite significantly, 1624 at last count. Remember, we'll be watching out closely for the AMFI data that comes out with regards to how flows have been in the month of August. July, remember, you had equity flows of closer to 8,113 odd crores. We'll wait to see how that has shaped up and how the SIPs have managed to stay the way they were, or there's been actual improvement, because almost on a month-on-month basis, the strongest part has been, the systematic investment plan and the money that's come in through that. But I think that's what you've got. Total equity inflows have risen about 12.8% in the month of August. We should actually start getting those numbers trickling in thick and fast. But just to run you through the other variables as well, there you have it. Equity inflows at 9,152. The last number in the month of July was 8,113. So that is an interesting uptick that's come in. Total assets under management, we don't yet have that number, but 25.81 lakh crores was the number that we had seen last time around. With regards to liquid funds, the flows has been up 75% at about 79,428.2 crores versus 45,441 odd crores. So this is a big move that we are seeing with regards to liquid funds. Balanced funds also this time around witnessed outflows of about 879 crores versus inflows. But it's really catching my eye, the liquid fund number, Neeraj.
Yeah, it's high. Usually you would see these happening at the end of a tax period or at the beginning of the quarter or otherwise. This is an exceptionally high number. I don't know if there were any kind of new fund offerings that would have led to this as well. We'll try and analyze this in greater detail. We'll get in a couple of experts, of course, to talk about this. But the other interesting bit is that despite equity inflows having looked up, because a number of months in the recent past when the SIP flows have stayed steady, the equity flows have actually come off because there were a lot of outflows. Now we're seeing that I would presume that the SIP flows would be in the range of 8,100, 8,200 crores. They wouldn't have maybe gone up too much, but equity inflows by and large have moved up. Maybe this could also be a factor of some NFOs that are open, which would have attracted the flows. So that is part one. But the equity AUM month on month is down about 4%. I would guess a result of the market correction and how some of these stocks that would have been held in the funds would have gotten
total AUMs are also lower. I think for the month of June and July, they stagnated a bit. And now they actually were the same number, I think, for June and July. And now it's come off a bit. So marginal down dip of about 0.7% with regards to the total AUM. But we should try and get in a few more expert voices on how they have viewed the month of August and the kind of numbers that have come out across the board. But, we'll wait till we get connected and get those views. But in the meantime, we'll focus back on the markets. Parthiv, we're looking at these mutual fund numbers, and it doesn't look disappointing with regards to equity markets and the interest thereabouts. In the morning, we had Yatin who did a piece saying that even while the markets are flip-flopping, while there is uncertainty, the number of demat accounts has actually gone up on CSDL and NSDL. So, do you feel that there is still more, that retail investors, are not giving up on?
See, Devina, one thing is clear. The Indian retail investor who is putting the money in the equity markets through mutual funds has become lot smarter and very, very resilient. Case in point being, we were just doing some sort of number crunching. A 10-year SIP is still sitting on a double-digit CAGR returns. A 7-year SIP is sitting on somewhere around 8.5%. A 5-year SIP is still at plus 6%. Only the 3-year and below SIPs maybe are sitting on flattish returns or negative returns. But a lot of SIP investors that we talk to, they are extremely confident about the future prospects because they know that now is the time where I think if they were to stop their SIP would be a very detrimental mistake. So I think what we are seeing is a huge stability of the monthly SIP inflows. Yes, I think there were some changes to the 8,300 magical number and it's not growing as rapid a pace as what we had seen. But I think this is the segment to focus on as compared to the one-time equity flows, which at times tend to come through one of the NFOs or what we saw, like Mirai launched a few NFOs. But more importantly, I think the equity flows are very stable. And what we are seeing is a shift towards the investor's attitude balanced fund, which at one point in time were like the darling funds for most of the investors. Now I think that mindset is changing and a lot of money is coming out of there, and a lot of money is going into, post the SEBI recategorization, into funds like multi-caps, focus funds, which in the longer run we believe will create substantial wealth for investors.
Okay. Radhika Gupta, CEO, Edelweiss Mutual Fund, with us on the phone line. Radhika, good having you. Thanks much for joining in. 2 or 3 pieces out here which have stood out. One, the equity flows, and that uptick continues. Let's start with the good news first. 12.8% month-on-month rise to 9,152. I reckon SIP flows would be about 8,000 odd crores. So you've seen a rise, Radhika, this month compared to the previous few in equity inflows.
I think despite all the bad news that you keep hearing on various channels, equity flows at least start with a smile. It's a good set of numbers actually, Neeraj. One is that, the SIP book was at 8,200 crores and it's been like that, which is a very stable number. And again, it reflects what all of us have been saying, that retail investors have been reasonably patient. 9,000 crores, even if you take into account balanced funds, and there weren't very many large NFOs this month. So in aggregate, it's a good number. It's a very, very good number, and it's across segments, by the way. It's multi-cap, large cap, mid-cap, small cap. In fact, it's heartening to know that you got 2,500 crores of money in mid and small cap as a category.
Yeah. The liquid funds category, Radhika, is an interesting one. Up 75%. What could have been the reason? I'm sure there's an obvious one, but I'm missing it right now.
No, so it's, liquid funds are very, very cyclical. And I always say don't pay a huge amount of attention to that number. A lot of money went out in the month of June, and now it's coming back in July, August. So June, if you remember, there was a very large outflow number in liquid.
The AUM coming off a bit, is it a little bit of a bother or no?
The AUM as an aggregate, remember last month was a very tough month on mark-to-market also. So mid and small cap got hit a little bit, and so AUM reflects mark-to-market as well. I think in terms of liquid fund AUM, if the question was around that, it's still been hanging out at the same 5.5 lakh crores. And also remember that liquid is going to go through a change from September when the new guidelines that SEBI has finally come into play on liquid funds. So this is a space that's seen a lot of regulatory action.
Okay. Radhika, so net, it seems that you seem pretty happy, and I think there is reason to be on the equity side. There are no big disruptions on the other categories as well. And, well, we're seeing some resolutions as well with the SL Group repaying the AMCs in part with one of the deals. So things seem to be on the right track for now.
In fact, the more heartening news is that if you look at the debt number, X of liquid funds, you got 10,000 crores net into the debt category. And given all that happened in the last 10, 12 months, that's very heartening. So categories like corporate bond, banking, PSU, you are seeing non-liquid money flow into debt. And I think to me that positive number is heartening in light of everything that's happening.
Okay, Radhika, we'll leave it at that. Thanks so much for taking the time out and speaking to us.
Thanks, Des.
Well, just one quick follow-up with Sunil Subramaniam as well, MD and CEO at Sundaram AMC. You heard him on the mutual fund show last week. Mr. Subramaniam, thanks for joining in. Quick thoughts out here. Equity flows are fine. Radhika was speaking about that, and that seems to be going out fine. Anything else that has stood out for you in this month's data?
I think what stood out is the redemptions much more, in terms of the fund sizes. And second is, I think, the balance fund category, which the first month was showing negative. Last month suddenly showed positive, probably or some kind of a massive mobilization by a fund. But it has gone back into the negative trending category. There is balance funds as a category. So I think that's a longer term trend is being sustained there. And another thing was that arbitrage continues to have a significant share in terms of the flows. Out of the total 9,000 crores of net increase, 3,500 is from the arbitrage category. So clearly the volatility in the market is driving a lot of institutional equity money into arbitrage. So I think that's and I would suspect that there's some of the liquid money also moving into arbitrage, because the new rules around liquid funds means that a lot of institutions are probably looking at arbitrage as an equity taxation, but a more liquid kind of a returns category, especially in a volatile equity market.
Okay, Mr. Subramaniam, just very close to market close, so unfortunately we'll have to wrap it up here, but thank you so much for taking the time on and speaking to us.
Yeah, thank you.
That's the view from Sunil Subramaniam, MD and CEO at Sundaram Mutual Fund. So that's as far as the MF show flows go. Okay, as things come close to the last 70 minutes of trade before the holiday tomorrow, what is doing well, as we said, are auto stocks which have picked up steam after starting off lower, and the Bajaj twins which have done well for themselves. Hemen, you want to come in on Bajaj Finance and Bajaj Finserv? Bajaj Finserv was a call on the Bloomberg Edge segment this morning as well. A lot of data points which point towards this stock to do well. Maybe average returns of 4 to 5%, 2% done already. Can somebody buy it at the current levels? Bajaj Finserv.
Buy, yes. Current levels, let's say if I had the option of buying 100 shares, I'd buy 50 now and 50 maybe $40 lower. But yes, coming back to main question, yes, it's a buy. We will walk into resistance at the 55-day exponential tomorrow. We are at 7318 in spot, Neeraj. We are heading towards 7550. So I'd buy some now, some on a 40-point decline.
Okay, that's Bajaj Finserv. By the way, Shankara Building Products, which has been locked in upper circuit since the last 2 sessions, is once again up about 20% in trade. So some buying definitely emerging at lower levels, considering this was a beaten down counter on year-to-date basis. Last 3-day gains speaks volumes of it, how the buying has emerged at lower levels. All right, it's just about 15 minutes to go for markets to shut shop, and it's time to take a look at what the dealing rooms are recommending in trade today. We've got Darshan as well as Yatin joining us with their channel checks. Good afternoon to both of you. Darshan, you go first.
Yeah, so some of the stocks that's been spoken about, MCX being one of them. It's managed to, it had fallen significantly over the past few days, again rising 11%. The management also speaking to a lot of these domestic funds, indicating some of the issues that were raised. We also spoke to the management, they had clarified, but those issues seem to be now getting over for the stock. It's up almost 11%. Some of the domestic funds have been accumulating. One of the pharma stocks which is not done well of late is Glenmark Pharma, which is down 1.5% again. So there is enough selling that's happening. Some of the large HNIs are actively exiting Glenmark. That's what's been spoken about. And Neeraj a while ago was speaking about how auto stocks have managed to move up. So some of dealers indicate that some of the funds have been very active in stocks like Maruti, Hero MotoCorp. They believe that the rains have been adequate and they are betting in on a rural demand, rural revival that will come in. So some of the auto stocks is where some of the fund managers are betting on. But Yatin, what are you hearing?
Kotak Bank, this is one stock wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. They do believe that, based on technical trends, this is one bank which could be on the radar tomorrow from the, a positive opening perspective. Dish TV is the other one, wherein dealers do indicate that there is a lot of HNI interest even at current levels. A lot of, buying is seen there as far as Dish TV is concerned. And finally, watch out for Apollo Hospitals. This is one stock wherein dealers are, indicating there could be, a large block deal very, very shortly this week. So on the back of this block deal buzz, this is also one of the stocks which is on their radar.
Okay, Darshan as well as Yatin, thanks a lot for joining us with your dealing room check. And as we highlighted in the start that the IT stocks are the one which have been under pressure. So both HCL and Infosys are your top losers on Nifty right now. Brijesh, come in on Infosys, considering the cool off that we are seeing in today's market for all these IT companies, would you take a bet on either HCL or for that matter Infosys?
See, Infosys started its rally from 780 and it moved up to the level of 847, and right now it's in the process of making an evening star. So chances are that it would be moving down. So if someone wants to go for a sell side, keeping a stop loss of 842 or 845, one can go for a sell side. But the support or the target which I would be looking would be somewhere around 805 to 810 zone. If anyhow, if it gives closing below 800, then only we can say, okay, the trend has come to the bearish zone. Otherwise, I would be assuming that it's a range. It would be a range bound session or the consolidation range, and the range would be 800 on a downside, followed by 850 on the higher side.
Okay. The other few stocks, that we'll probably look at, for one, 6,300 plus now on Maruti, back after hitting 5,900 just a few days ago. So the trend looks like it's almost at the high point of the day now for Maruti Suzuki. What would you do, Brijesh, with a Maruti and also an L&T, which at some point looked like it would break 1,300 on the downside, but has managed to stay afloat?
See, Devina, one of my BTST call is Maruti only. Now, the Maruti, if I'm not mistaken, it has given a bounce back from a level of 54.25 or 54.45, the low, and after that, as it has surpassed the level of 61.50, that was been acting as a tough resistance. Now, all analysts would be coming up and giving a buy call. Now 61 would be acting, 6100 would be acting as a support. Now initially right now at 63.35 or 63.40 the stock is been quoting. So if someone wants to play for the BTST, your stop loss will be 61.90. And if someone wants to play for a short-term bet, then keeping a stop loss 6100, play for the target of 6600 plus. For the BTST, target is 64.20. Regarding with the L&T has been concerned, overall trend of the chart is still promising. Nothing to be worried about till stock doesn't give closing below 12.20. Right now at 13.55 the stock has been quoting. Still a little bit pressure has been there, but I think the stock has a support at 13.25 to 13.30 band. So if it trades at that juncture, one can look out for a long set with a stop loss of 12.80 and play for the target of 13.85 to 13.80 to 1400 zone.
Okay. So Maruti Suzuki, that is Brijesh's buy today, sell tomorrow idea. So since we're on that topic, Hemen, why don't you give us yours as well?
Quite a few tempting stocks to look at, Devina. One is a Godrej Consumer, one is a Bank of India, one's a Manappuram, and a State Bank. But I'll go with Bank of India because I think the Nifty PSU Bank Index is showing some sparks of life. Led by State Bank, I think many of these stocks could give you a 5-7% move in the current settlement. So BTST on Bank of India.
Parag Milk Foods is up 8%. So that one's doing well in today's trade. Volumes have picked up a bit. The last month has been particularly bad. In fact, last 3 months with the rains and the floods and the supply concerns, that stock was down heavily. But looks like some bit of a recovery kicking back in. Do you have a call on Parag Milk Foods, Parthiv?
See, Devina, very frankly, I think Parag Milk Foods is a stock that we do track. But my concern is that at times we have seen adverse volatility in Parag Milk Foods earnings. We know for the fact that whenever the cattle feed prices tend to go up, their margins also shrink, and we have not seen any sort of sustainability of the margins. And currently, in terms of the valuations it's quoting at, is very similar to an FMCG company. So my thesis is simple: why not go with something like a Britannia, which also houses this dairy products business, which is a far bigger, better brand, has a far bigger, better distribution channel, and not only that, I think they're innovating in terms of even their biscuits and the croissants and everything that they've launched. And the stock has luckily corrected from its peak. It's yet expensive, but I believe it has all the ingredients what it takes to make it even a multi-bagger from here over the next 5-10 years. They have expanded their capacities and their reach has even gone to the east where the markets are highly underpenetrated. So I think as compared to a Parag Milk Food, Britannia I think would be a better bet.
Okay, couple of stocks which are trading at day's high. One of them is Titan, sitting with gains of 2%. There is also buying seen that I think Siemens, that's also at day's high right now with gains of about 2.5%. And something from the broader market. So you've got Rain Industries, that's up 17% now. Shankara, we already highlighted, locked in upper circuit with 20% gains. Goa Carbon is the other stocks which is up about 20% in trade. So good gains seen for most of these stocks. And I think most of them have been beaten down. But one space which is up for the second straight session, I think on paper stocks, pull up JK Paper, it's up about 8% in trade. West Coast has also seen some bit of good buying interest today. JK is at 8 days high, 8%. West Coast also seeing some bit of gains, and Ashton Paper from that pack has also seen strong gains. Parthiv, I know the rally that one sees in paper companies, it doesn't last, it actually fizzles out, but overall looking at the scenario, I don't know how much of rupee depreciation works in their favor because the local guys get the pricing power then. Also, the capacity expansion in this particular industry has not taken place, I believe, in the last 5 to 6 years. Is there anything in this space that you're tracking? How are the prospects looking like for these paper companies?
Absolutely, Navneet. I think you raised very valid points. A couple of concerns. One is, as you rightly mentioned, whenever the rupee tends to depreciate, I think these paper companies, especially the share prices, tend to do well on a fact that a lot of dumping that happens from Southeast Asian paper makers tends to stop. My slight concern is that last year, I think the paper industry did extremely well because, yes, no new capacities had come, but a lot of South-based paper companies weren't able to produce paper in terms of their high utilizations because of scarcity of water. But I think this year the spread of the monsoon has been extremely good, and what we believe is because the paper prices are relatively stable, a lot of new capacities which were not working until last year would come and give more supply to the market. So we are a little cautious, and I think one theme that we have played the paper industry through is JK Paper. They are one of the market leaders, and they've taken full advantage of all the troubles that we had seen in Ballarpur Paper, and their capacity is not coming back. So I think JK Paper still, in terms of the balance sheet qualities, in terms of the variety of papers and the distribution, I think they're still the best, and that is the only company that we would prefer in this sector.
All right, I think that the index is rescaled 11,000 now towards the end of the trading session. So encouraging note is probably what we're looking at to close this day of trade. Whether it holds on to that in the next 5 minutes or no is something we'll have to wait and watch. But banks are doing well. They're supporting. The bank Nifty is up almost 1%, so that too is up a good 270 points. Bank Nifty actually has not seen much of a waver since morning. As you can see, flatlined after that gain in the morning session and is just about holding on to those gains. But it's the index which is starting to perk up as well. IT continues to reel under pressure. Auto continues to reel under pressure. And then you have a few of these PSUs under pressure, Power Grid, Indian Oil, that's under some amount of pain this afternoon. Anything that's caught your attention, Hemen, in the last 20-25 minutes of trade?
I think some of the funny stocks which I can spot are Tata Power. I don't know why Tata Power moves up.
Why is it a funny stock?
It's not done anything for 12 years, Devin. I don't even know why they're in FN or why.
I think it was up on Friday. Some short covering bounce was seen in this.
Okay, and another observation is Coal India. Devina. So, I mean, some offbeat stocks, funny in the sense, they normally don't catch your eye so much, but yeah, you have Coal India moving up. Yeah, and in the cement space, Ramco and all the bank stocks, Kotak actually gave a downward breakout a couple of days back, Devina, and now it staged a strong comeback.
But you wouldn't action any of these, would you?
No, I would, yeah, maybe Kotak, yes, because I'm bullish on the bank Nifty as a whole, and Kotak and HDFC Bank are technically the strongest of the lot. So I have a feeling that Kotak is something one you can act on, not from a BTST point of view, but maybe slightly from a positional point of view, Devina.
Okay. Just one final question to you, Parthiv, before we let you go. Any study on Dr. Lal Path Labs and whether you would be comfortable buying that business?
Yes, certainly, Neeraj. I think it's an excellent business model. And no doubt the stock has really run up, and I must say that the stock was even very resilient during the worst of the mid-cap carnage, and the only reason being that one really knows how underpenetrated this diagnostic space is. And the good thing about these businesses is that in each of the segments that they operate into, and more importantly, I think we see that Metropolis is very strong in the west and slightly in the south. Dr. Lal Path is very strong in the north. They're trying to penetrate in the east. So I think there is a lot for all of these companies to grow in their own territory, yet think about expanding in other geographies. And I think more importantly for Dr. Lal Path, I think they are certainly going into more innovative tests which bring in more revenues and better margins, which is I think key, because there will be this affluent class which will be able to spend on these higher tests, and I think that's where Dr. Lal stands apart from most of its competition. And I think certainly even out here, though the stock has run up, I believe this can be a nice compounder in one's portfolio, and this space is something where I believe that these select organized players will gain a lot of more market share from the unorganized and the smaller players.
Okay, Parthiv, we'll leave it at that. Thanks much for taking the time out and being with us today. Hemen, Brijesh, stay on. We'll take in closing thoughts from you. But the market's ending in ship shape, about 1% higher for the Nifty Bank, the principal driver. About 11,000 for the Nifty, which is great. That's that point of resistance that the OI was suggesting. But remember, now it's also shifted to 11,200 for the month. 11,500 also has fairly decent call positions as well. So the points of resistances are only shifting higher. Let's wait and watch if we continue this run come Wednesday. Tomorrow is a holiday. The mid caps and the small cap indices also ending reasonably well. But let me talk about the large caps first and the stocks which have moved well on the Nifty 50 today. Yes Bank 4.5%, not index moving, but nevertheless active. UPL about 3.5%. Maruti Suzuki with 3% gains is doing well for itself. So is Larsen & Toubro about 2.5%. The Kotak Mahindra Bank about a couple of percentage points, and the Bajaj twins doing well for themselves. Titan 2 about 1.5% higher in trade. What's not done well? IT and select auto names. So HCL Tech, Infosys Tech Mahindra. In between them wedged is Eicher Motors. Then there's a Bajaj Auto. TCS corrects a little bit as well. So that's essentially the bucket which hasn't quite done well, but not too many losers. Fair degree of gainers. It's not a Monday that most people, at least the ones who are invested on the long side, would complain with too much. But the broader markets now need enough gusto there.
That's right, Neeraj. In fact, we've seen some buying interest at least in the last 4 trading sessions now. It's been a good start to this new week. So from the broader markets, let me start off with Shankara Building, a counter which was locked in upper circuit for the 3rd straight session today, up about 20%, closing around the levels of 441. We've been talking about RBL Bank, a lot of brokerage notes also coming in. Of course, they've been scaling down the target considering the sort of price correction this bank has seen post its first quarter numbers. But the brokerage is highlighting that the lingering asset quality issues is the reason why the stock's been correcting, but the long story could be intact according to ICICI. Stock closing up about 7%. Gold financing companies Manappuram Finance and Muthoot, both of them rebounded today. So Manappuram closing at day's high with gains of about 5%. Muthoot, after the clarification coming in from the management of the company, also saw some respite after the fall we've seen in past many sessions. That's up about 4%. And a couple of your other stocks like Siemens, that's recovered from the lower levels. In fact, in the last 1 hour of trade, the stock's closing at day's high, by the way, with gains of about 3%. Some buying interest seen there. And your beaten down stocks like Rain Industries rallied about 16 to 17% today. So that's closing upper circuit, actually, the closing with gains of about 20%. And lastly, JK Paper, it's the 2nd straight day that we're seeing good gains for a couple of these paper companies, up about 8%. On the losing side, Somani Ceramics, right from the word go, was locked in lower circuit with cuts of 20% after the news came in that the company's stockbroker defaulted on the repayment of outstanding loan of the company. Equitas was down 6 to 7%, did not get extension from RBI. SBI Life was the other stock which saw some cool off today. And a couple of your pharma stocks today like Glenmark as well as Biocon didn't have a great day when the markets were rallying. So both of them saw cuts of between 1 to 2%, Davina.
All right, a good close to the session this afternoon. It's a truncated week. Tomorrow is going to be a market holiday. But as we step into that holiday, we've got good gains on the index. So the index finally closes above 11,000. So that's probably heartening to see. 58 odd points higher. The Sensex up about 163 points, with the Nifty Bank adding about 240 points. Taking a look at the contributors then in today's session, while the Bank Nifty somewhat stabilized throughout the first half of the session, the morning it took a dip and then post that gain, it sort of plateaued out. The gains came in from L&T towards the end, and the banks, obviously, they are heavyweights. HDFC, Kotak Mahindra Bank and ICICI Bank. What lost out was IT. The defensives took a backseat. So, and the entire IT pack seems to be amongst the top losers, but overall just about 20 points lost.
Well, and also the market breadth, if you look at the entire listed universe, and it's just not today, in the last 3 sessions now, market breadth has been firmly in favor of the advances, and the ratios continue to be about 2:1 even in today's session. And volatility index cooled off today as well, which was a good sign for the bulls at least. On Friday, you did see a cool off about 4 to 5%, and today it's closing sub mark of 16.
Turnover, just a quick snapshot of how volume shaped up towards the end of the trading session. So on the cash market as well as on the futures and options side, very thin on the cash market side. Still, I think we're starting to deviate towards making a new average, which is sub 30,000. On the F&O side, we're about 9.5 odd lakh crores. But a quick comment from both our technical experts with regards to those key factors that they're going to be watching out for as they step into trade on Wednesday. Brijesh, let's come to you first. Your closing thoughts.
There's been no doubt 11,000 has a psychological market and it closed above that. But still, I would be saying that we are still in the consolidation phase. 11,200 on the higher side, followed by 10,720 or 750 on the downside. When we are surpassing this level of 11,200, we can see a short covering to the level of 11,460. But it doesn't mean that the stocks would not be outperforming. The individual stocks would be outperforming. Today, we have seen a buying coming in power stocks, followed by metal. Some of the metal stocks were doing there. banking, mid-cap banking has been little bit charged up, but the major contribution has to be come up from a Reliance and SDFC Twins. If they start moving up, then we can see 11,200 in coming days.
All right, Hemen, what about you? Your closing thoughts?
Well, I think there's a truncated week, but otherwise I remain bullish on the market, and I still maintain it's a pullback. But yeah, the pullback has a long way to go. 11,235, 11,340 as far as the Nifty is concerned. Bank Nifty, Devina, we started the new series tepid. We started with 15.10 lakh rounded off in OI. We're at 17.22. I guess this will get adjusted at 5:30, but even then, we've seen significant addition in Bank Nifty at lower levels. So one, Bank Nifty, which is even underperforming, has a propensity and the capacity to surprise on the upside. Downside appears limited. 800 to 1200 point bounce in this settlement by the expiry, I think, seems like a distinct possibility as far as Bank Nifty is concerned. So I would be positive on the markets for some time. It's a pullback. I mean, everything suddenly starts looking good. But yeah, I think there is some more headroom left, a week or two of positivity. But as of now, I would be clearly, IT is going to remain weak because the rupee is going to strengthen some more. Another 70-80 paisa as far as the rupee is concerned. The whole month, dollar is not going to appreciate majorly. So the market peaks, the rupee bottoms. So all this will pan out at the end of the month, currently positive.
All right, we'll leave it at that, gentlemen. Hemen as well as Brijesh, thank you so very much for joining us this afternoon with your thoughts. Appreciate it. And on that note, it's a goodbye from Neeraj, Navneet, myself and the entire team that's put this show together. Thank you so much for watching.